this is Kyle Hauser, Chairman of Hercules Angels. Before we begin this entertaining video, this venture investment, angel investment remix, I wanted to tell you a little bit about Hercules Angels. We're a private venture club. We're based in Palm Beach, Florida, New England, as well as in the Bay Area in California. And our venture club is very uniquely positioned. We focus on the formation and incubation of new technologies coming out of national laboratories, research institutions, as well as through relationships with strategic partners. In this process, we work with the scientists, we work with the researchers in the protecting of their intellectual property, as well as in the formation of the new company. In addition, aligning the venture team, the management expertise, and the angel investor or venture group to help support as a shareholder or stakeholder in the long-term success of these firms' growth plans. We hope you enjoy, and this video should be very entertaining.
Are you considering being an angel investor?
Randy, what is it that you like about angel investing?
I like investing in spaces I have no business understanding, or I don't have time or bandwidth to understand, but I have the robust community of 750 members to help me with their mind share and their wisdom to help me be a better investor.
Doug, and you?
It's very enjoyable to be able to link up the young entrepreneurs with the people with experience and see it click. You know, there's something magic when a business clicks. So I really enjoyed the opportunity to do that.
Randy, can you tell us a little bit about what the angel model looks like?
We receive almost 100 companies a month, and those companies are whittled down through the committee system. It's about 80%, I hate to use the word failure, but conversely, when you present to our committees, 80% are rejected for a myriad of reasons. Usually it's because of lack of revenue. We are usually a little upstream. We're usually Series A in our technology. We usually need a validator, i.e. revenues, so companies a little more mature. The companies have some type of exit plan within 3 to 5 years, and hopefully an exit in 3, which usually means 5 or 6.
Right.
Well, I think it's critical if you're choosing or want to be an angel investor, don't do it as an island. And join a group because you're going to have a lot more robust deal flow, and you're going to see a whole spectrum, whole ecosystem, hopefully, of the companies that are presenting in the marketplace.
Excuse me, Dave. What's your management style for your average angel investment?
Yeah, as far as style, I like to talk to the CEOs that I'm dealing with as a board member pretty often. Short conversations, but often, so that there's a relaxed feeling that I'm the coach. I told you I'm chairman of 6. And of those 6, I'll talk to the CEO at least 3 or 4 times a week each. And the point is that with that kind of informal conversation, you're beyond the point of defense. And you really do say what's on your mind, and that's the important thing. So these CEOs will often talk about personal problems as well as corporate problems. In many cases, fundraising is always at the top of their mind, even if the cash out date is 6 months to a year from now, it's still on their mind. And so that conversation comes up often.
Jim, can you tell us a little bit about risk and what it means to get on the balance sheet?
Risk and reward, there's a linear correlation there. But there is risk there. You won't succeed every time. But taking the path of more risk, or as I say, getting on the balance sheet with an organization, if you have that in your blood and flair and you really want to do that, it's particularly when you understand the patterns, it's not as risky as you think. In fact, it's a lot less risky than not doing that in many instances.
Dave, what's your strategy for managing your risk and your investment as an angel?
We have a 13-week rolling forecast. We want to know what the burn is each month, and we want to know the cash out date. Those are 3 things. The rolling forecast is prepared by management and talks about where payroll hits and when the cash gets low and whether or not some new cash is coming in. So we watch the flow, kind of like the ebb and flow of a tide. But the cash out date is the absolute date that we focus on. And because money doesn't come that easily to all these companies in a second round, it really is something that scares the entrepreneur, rightfully, keeps them up at night, correctly, and keeps the board focused on the need to make a business that people will invest in the second time around, or the third.
Frank, can you give us an example of a successful angel investor as well as entrepreneur?
It says here he's a successful entrepreneur and angel investor. Oh, okay. I was stunned. But I kept my composure. But look at this. Look at this resume. It only fits on one page, and it's 18-point font. It says here he co-founded Quack.com. Well, who ever heard of Quack.com? Well, you didn't hear about it because in only 12 months he sold it to AOL for $200 million. Okay, all right. I'm starting to see where he's got some cachet maybe for this group. Can everybody repeat after me? Come on, play along with me. $200 million.
Randy, in closing, please let us know what motivated you to organize and be involved in an angel group.
I started Credits for Me because of my lack of discipline and expertise as a private equity investor. My wife and I were able to retire in the mid-90s, and I wanted to diversify into technology investing. And what happened after that is a lot of iBankers were turning my small liquidity event into smaller liquidity events. So I said, there's got to be a better way to have smarter people, or I call the wisdom of crowds, swarm intelligence or mind share around me so I could be a more effective and efficient investor.
Thanks everyone for joining us here at Hercules Angels. We look forward to seeing you again. Thanks to the Frank Peter Show, thanks to Vader TV and Creative Commons.